All right, today is a super important video. We're going to be covering deviations. This video is going to be pretty hefty, so just make sure you're paying attention and you understand everything that I'm talking about. Pretty much all a deviation is when price pretends to break a key level, whether that's to the upside or downside, traps a lot of traders, and then we reverse sharply into another direction. This works in ranges, this works in trends, this works on key levels, so pretty much everything that we've gone over so far. So now's the perfect time to start understanding deviations once we know about all these other things. So first we're just going to go into some common examples of deviations. I'll kind of explain them out and then we'll go look for examples like we always do on the charts. So the first one, and probably my favorite, is called a range deviation. So we're going to make a range here. I'm just going to use these lines because it'll help us out. So let's pretend we have a range. We know what a range is. We have our range highs and our range lows, and price is trading between these two zones. Okay, so we have a range high and range low. So I said a deviation is when price breaks above or below a key level. So in this case, let's have a bullish deviation. So in this instance, price would come down and break below the range lows. Now, at this point, a lot of people are going to think, okay, we've just had a break in market structure. Price looks to be continuing lower. Let's short down here in this region. And then at the same time, we're sweeping all of this range low liquidity here. We know that there's a lot of orders underneath the range lows. We can verify this on our heat map, and we just know this. So we come down and sweep out these range lows. And then we trap a lot of traders down here who are starting to short this break of structure. And then what does price do? We violently come back up within the range lows, and then we expand to the upside into the opposite direction. Let me scale it a little bit so it's easier to see. Dude. Okay, yeah, like this. And then price would continue to the upside. So right here is called our deviation. This is a bullish deviation. We can see that price faked coming to the downside before moving sharply back up and then reclaiming the range lows and continuing higher, taking out these range highs. Now, how do we spot a deviation versus a serious breakdown? Well, that's a great question, and you pretty much need to look at a few things. A is going to be the amount of time price spends underneath the range lows. So usually you're not going to be wanting to enter directly off of or trying to predict the low. Obviously we can go into some fibs and stuff like that, but you're going to want to wait for confirmation back in the range lows. And you're going to want to see that we have a sharp recovery to the upside. Something that would get me worried that would that would confirm more of a breakdown would be something like this. Price, chopping around like so. This to me would kind of verify that this is starting to not look like a deviation anymore and is starting to look like a serious breakdown. But if we think about this, why would price do something like this? Well, this is going to trap all of these traders who are pretty much going to try and short this breakdown, while at the same time is going to stop out all of these traders who are long within the range and had their stop losses underneath the range lows. I can't tell you how many times this exact pattern happens within the market. Again, like I've said in previous videos, is that the market's not just going to be very simple. It's not just going to be we're ranging, okay, we break down and we move lower. We're going to manipulate a little bit in order to shake out more people, fill in more orders, and then continue the real move. So this deviation is our manipulation move right here. A lot of people like to call this an AMD. We have our accumulation, and then we manipulate to the downside or to the upside before continuing higher. Let's look at how a bearish example of this would be. So instead of breaching the range low, we would breach the range high. We come up here, sweep out all of the highs, violent move back within the range highs, and then the real move to the downside. So this is going to be our deviation. What is our deviation? So we came above a key level and then we sharply had an impulse back down within the key level, so back down within the range low, or range high, sorry, and then we had the full move to the downside. So these are called range deviations. They happen in the market a lot of the time, which is why I said I don't personally like to trade directly within a range, but I like to look for these deviations because they are very powerful on every single time frame and every single pair that I trade. The next, we can also have a trend deviation. This is even more simple. So for example, let me make this a little bit smaller. Okay. For example, let's just say we have price trading in an uptrend with our higher highs and higher lows. Like so. So a deviation would be we would come below this last swing point, which would invalidate this trend, get a lot of people scared. Okay, the trend's broken. We're going to start to look to exit our positions and start to short in the market. And then we see a violent move back above this swing low. And then we continue higher. This happens all the time in the market as well. And we can see that this will definitely trap a lot of traders. It'll create some panic selling before having another move to the upside. You'll see this happen. Usually a lot of the time, trend breaks are not, the first time we come under the trend right here is usually not the first break of it. Just what I've seen and personally how I trade, like I really don't see this very often. You wouldn't really just see, okay, it breaks the trend the first time and then we just move straight to the downside. Usually we'll have something a little more complicated like this, and then we'll come down and maybe start a real breakdown like this. But this is going to be a deviation of this trend. We come below a key level. Let me highlight this out. Here's our key level right here, our swing low that confirms this uptrend. We come below it very shortly. We have a strong recovery to the upside before moving higher. And now, same thing for ranges. What would this might look like if it wasn't a deviation and we were actually breaking down from this trend? Well, instead of a sharp recovery, we might hang out below the swing low, come up, retest it before moving to the downside. Something like this is totally possible. We just need to kind of make an educated guess, essentially, because that's what we're doing. But if we see a sharp move to the upside and then reclaim back in this area and continue higher, we'll just go over the bearish example as well. I just really want to make sure you guys understand these deviations. So we are in a, oh, dude, this is terribly drawn. Okay, we are in a downtrend like so. We are going to fake a breakout to the upside. Hold on, I had the trend in the wrong place, geeked. Okay, we fake a breakout to the upside like so. Everybody's getting very bullish. They're waiting for this retest of this line right here to enter long. And then we just have a violent move back down, retest before continuing lower. So this is another example of a deviation of a trend right here. We came above this key level very quickly. We sharply moved back down and then we continue within the trend. So those are two types of deviations. We have range deviations and we have trend deviations. Now we can also go over key level deviations. I'm just going to bring this out with a straight horizontal ray, like so. I'm going to make this pretty big. So key level. What is considered a key level? We can just kind of type it out. Well, any of our key time frame levels. This was in the last video. We just went over it. Daily opens, monthly opens, weekly opens, yearly opens. Everything like that. We can also go over key swing points. All-time highs, Prev all-time highs, key swing lows, pretty much anything in this niche. We've went over this in a lot of videos, and we can also have, I'd say, timing lows. I'm explaining this wrong, like session lows. So like New York session low or something like that. So we have these three sort of things that I'm classifying as of right now as a key level. So let's just pretend that this is any of those key levels. Oh my goodness, dude, no way. All right, so my camera fell. I don't know why. Okay, so we're gonna classify this as any key level. So let's just say price is trading like this, above this key level, and then we come down to the downside. So right here at this point, it looks like, okay, this key level is lost. We are going to start breaking down from this area, and then we have a sharp recovery. We retest the key level before moving into the opposite direction. Same thing could be in a bearish example as well. We're kind of trading up to it. We break through it. Everybody gets super bullish. Then we come sharply below it. Boom. And this is going to be our deviation below our key level. A lot of the time you're going to get the retest of it, but not all the time. So those are sort of the three main deviations that we're going to cover today. Key level deviations, range deviations, and trend deviations. These are super powerful. We're going to go into how we can pretty much refine this and understand when something is a deviation, but you just want to understand that it's pretty much anytime price is coming above or below a key level, we're getting some sort of manipulation, faking out traders, etc., and then moving back down pretty sharply before continuing the trend. Okay, so now we're ready to hop into some examples. Hopefully you have some sort of understanding on what a deviation is. Let's see some examples we can find over here on Bitcoin. Let's just mark out some monthly levels, and there is definitely going to be a deviation on one of these. I'm just going to mark out, we know how to mark these out. I'm going to mark out all of these, I'll do 2 picks, all of these monthly levels here, and we'll just look for deviation. Whatever, skip that one. Okay. So I have all these monthly levels marked out. You guys should know how to do that. We'll go into the 3-day time frame. Look here. Okay, so right here we have a few. Pretty much, yeah. So here is the most recent monthly open. We see that price. This is a pretty shitty example. Damn. Hold on, I need something cleaner. Well, let me get out of here. My bad. Let me get to something cleaner. We'll go on to the dollar index. Yeah, I remember the dollar index has a perfect example of a range deviation. Okay, so I used this in my ranges video where we had this range high and we had this range low. We sort of have two examples of deviation. We have a sort of minor one and a kind of major one. So we see that price is ranging between this swing high right here and this swing low. And then we see that price comes sharply below it with this big 3-day candle. And then we see this recovery. Now, if you guys are struggling to spot a deviation versus a breakdown, we see that we have a big move to the downside followed by these 2 3-day candles that show some pretty nice strength. And we see that we ultimately close above the range lows. At this point, we can confirm that this is a deviation. This will be our range deviation. We can see we were ranging. We come down below the range lows, get people scared, get people shorting, and then we quickly move into the opposite direction. And what do we have here? Well, we have a retest of the range lows before a massive move to the upside. And then we manipulate the other side of the range as well. We can see that price comes sharply above the range highs. Then we have a little bit of chop, a little more chop here, but we can see that this 3-day candle right here fully gets wiped out with this massive 3-day here. And then we close underneath the range highs. We retest them right here before moving down to the range lows. This time we didn't breach it. Okay, so these are 2 sort of mini range deviations in this range. But this range just kept on going, and then we can see that we actually have a massive one right here. Price came above and below. We can go into the weekly time frame so it's a little easier to see. We see a very strong series of weekly candles like so. 1, 2, 3, 4, 5 weekly candles, and then we start to have some very red weekly candles. Now, at this point, you cannot classify this as a deviation. We are still trading above the range highs. But then after this massive move to the downside, this massive weekly candle, we can see that price has came underneath the range highs, and then now we kind of fill in this weekly imbalance before moving lower. And one very key thing that you can mark out within range deviations is we can try and predict these with fibs. So I'm going to quickly go over how to spot out range deviations, or mark them out, as I should say, with fibs, and kind of get your entries more precise. So we know how to mark out ranges. We just pull from the range high to the range low within our fibs. We can turn on the 0.5, the 1, and the 0. So right here is our range that we've marked out with our fibs. We have our range highs marked as 1, our range lows marked as 0. Hold on, this is range lows marked as 0. And then we have the 0.5 level, which is the middle of the range, the mid-range. So in order to predict these deviations, we're going to need fibs above 1 and below 0. Hopefully that makes sense to you because they'll be higher up. Some very common deviation fibs are going to be the 1272 and the 1314. If you turn these on, you'll see that these get hit a lot of the time. And then we also have the 1618. So drawn from this high right here to this low, hold on, what do I have? Like two of them, or no, it's because of this. Okay, my bad. So from this high to this low, we see that, okay, from this high to this low right here within this range, we see that these deviation fibs got tapped into perfectly before moving to the downside. And then in this sort of bigger range, we can see that the 1618 got pretty much tapped into before moving to the downside. Of course, they're not perfect taps, but these are sort of areas where price might start to slow down after coming above or below our range. And then we can see if we draw the fibs from the other direction, that price sort of found a bottom on the 1618 right here. So this is a perfect example of a range deviation. We have our range highs, we have our range lows. Price sharply comes above the range highs, sharply declines before continuing down. And on the higher time frames, when you see a violent range deviation like this, you can at least expect all of the range lows to get taken out. A lot of people like to target the mid-range, which is valid. That seemed to be where the price bounced for at least a second. But when you see a major high time frame range deviation, a lot of the times I like to target these swing lows down here. So that's one example of a range deviation. Now we can go into a trend deviation. I'm actually looking at a trade potentially on XRP, but I can just sort of highlight this right here. I'm not sure if this is going to hold, but this is a pretty good example of a trend deviation. So we have this clear downtrend on XRP. We can see that price started to decline pretty sharply in this region, breaking this swing low right here, as it should, but it pretty much broke down way lower than where it would to have a perfect trend tap. So you can see that price came underneath this trend, like so, with a violent move to the downside. And then we had a violent move to the upside here, and then now we're starting to chop down and come into the trend line, but this is considered a trend deviation. It didn't really provide a move to any of these swing highs yet, but that might be the case. Invalidation would be we come back under this and close under here, but as of now, this is a trend deviation on XRP. So there's one example of that. We can see higher time frame on the NASDAQ. We definitely have a trend deviation high time frame, because this scares a lot of people. Okay, this is a very high time frame trend deviation, but as I said, this works on every single time frame. We have a very clear uptrend on the NASDAQ. Higher highs, higher lows. And then we can see we have this very violent weekly candles to the downside, followed by some very strong weekly candles to the upside. So this is going to be our deviation of this trend. And then we have came back above it and started to trade above it. So this is a perfect high time frame example of a bullish trend deviation. We can see we are in this massive trend from literally 2022 all the way to 2025. We come under it. People literally shit their pants saying it's over. We're coming down to all these swing lows, blah, blah. This is the first trend break. Keep that in mind. Then price moves sharply to the upside before reclaiming it, and now we are perfectly within this trend. Nothing to worry about as of now. So that's an example of that. Now let's find some key level deviations. Let's go over here on Solana chart. I'm just going to use this indicator. We'll go over this, but just to mark out the opens, and yeah. So let's go on to the daily time frame. Okay. So we see that we have the 2025 open here. 2025 open should be a key support and resistance level. Let me go into the weekly time frame. This was actually better. And we can see that price trades all the way up to the 2025 open. It has one reject-ish, but we ultimately get this very strong weekly candle to the upside. After this, we have some sharp weekly candles to the downside, very big ones with some nice recoveries. At this point, we have deviated the yearly open. We can see that price comes sharply above it and then declines below it. We're looking for some sort of retest. Doesn't have to be the 2025 open. We didn't really get it here, but what do we have here? I'm starting to put everything kind of together, but we have a retest of this order block before having a massive move on Solana, about 42%. So this was a clear deviation above the yearly open. This is a bearish deviation though. So we came above the 2025 open and then sharply declined. And what can we target on these key level deviations? Well, we can target fibs, we can target fair value gaps, or pretty much anything, swing lows right here like we have taken out, pretty much anything that we've learned so far. We have another example of this just on a lower time frame. We'll go on to the 3-day. This is more like a sweep, actually, I'm not gonna lie. Yeah, this is like pretty mid, to be honest. Let's find a more recent key level deviation. Let's go into Ethereum. Oh, I mean, Ethereum is actually so perfect for range deviations. This is pretty much how I traded all of this year and last year on ETH. Let me take off this indicator. This is some very important sauce right here, so pay attention. We have, I think I mapped this out in the ranges video, we have our range high and we have our range low. What do we also have? Swing points, swing points. This is the previous all-time high for Ethereum. So you'd obviously want to mark this out. And then this level right here is going to be the last major swing low of this consolidation zone before Ethereum goes turbo mode. What can we do? We know about our range deviation fibs. Let me go ahead and take off the 1618 and then put on the negative versions as well. And change these to black. Okay, so we can see that if we turn on the deviation fibs on the range, actually, hold on. The colors make it easier to see, I'm not gonna lie. Put them back on. Okay, so this is like, I would say this is the perfect chart to learning about pretty much everything. Okay, we have our range. Price comes sharply below these range lows, get people shitting their pants, and what happens? We come into this swing low. What does this swing low coincide with? It coincides with these range deviation fibs. We can see that this is our range high, and this is our range low where we pulled these fibs from, and it perfectly taps within this zone, taking out this swing high. Sharp move to the downside. Then we see a big move to the upside, indicating that this is a range deviation. We can just highlight the deviation right here. This is a bullish deviation. Okay? And then what happens? We retest these range lows, absolutely perfectly, and then have sharp moves to the upside. So there is our deviation to these lows right here. We came below these key swing points right here. We deviated them, we swept out these lows, which is a probable area we could bottom, coinciding with these deviation fibs. Then we move sharply to the upside, and then we come to test the range highs. What happens? We come into the deviation fibs again, mixed with this very key swing point of the previous all-time high on Ethereum. We tap perfectly into it, and then we come sharply below the range highs again, and then now are trading within the mid-range. I wouldn't necessarily say that Ethereum needs to come to the range lows, because usually the first deviation of a range is going to provide the biggest move. While it did also deviate to the upside right here, we can highlight this deviation. The move as of now isn't as strong as this deviation down here, but here's going to be our deviation. So hopefully you see that this is a range deviation. We have our fibs drawn out, and where price is deviating to on the high time frame into these key swing points, which also coincide with the deviation fibs. Okay, another range deviation example. Now let's go back into a key level example. I know deviations can get hefty, but if you really practice them, you'll spot them pretty much everywhere, and you'll see that they are absolutely insane and cracked in the market. So let's go on to, we were just on XRP, key level deviation. Okay, wait, hold on. Let me see. Oh, also, last thing to note is I said key level deviation. This was pretty much a key level deviation above the previous all-time high as well, and also it just coincided with this range. Okay, there's got to be some on Bitcoin. I just got to mark them out, so it might take me a second. Let's go on to some quarterly levels. We know how to do this. We just went over this. You should be getting more familiar with them. We'll mark them out real quick. So there has to be one in here. All right, so here we have one right here. I mean, this is kind of shit example again, dude. Hold on. Okay, well, here's kind of one. So we have this quarterly open right here. Price comes sharply above it. Price comes sharply below it right here. This can be considered our deviation. Hold on. Boom, deviation above this quarterly level. And then we see that price taps pretty much into it again, rejects off it again before continuing lower to the downside. Also, we can also mark these out on the lower time frames like the daily opens. I look for daily open deviations all of the time. These are pretty cracked. We'll just mark the past like 5 and check these out. So these work on pretty much every time frame, every single key level. You'll see these deviations. So mark out your swing points, mark out your key levels, mark out your ranges, and look for deviations because they're super powerful. Okay, so these are all daily opens right here. Okay, so we can see, okay, well, this is a previous day open. This also works. It's a key level. We went over this. It's a daily level pretty much, but this is an untapped daily level until we come up to it. We sharply move above it. We have some choppiness before very sharply moving under it. So we deviated this previous day open right here before coming down to the downside. Didn't really provide a great entry, but this is still a deviation. We come up above a key level, then we come sharply down, and then we continue to the downside. Okay, let's see. This was today's open. Nothing really too crazy here, actually. Yeah. Okay, well, that's pretty much it for deviations. You can look for these on pretty much every single time frame. You can look for them within ranges, like we went over. You can look for them within trends, like we went over, and then also these key levels. Daily deviations are great. I wish I could have found more examples, but if you guys just go on your charts, mark out a bunch of daily opens, you'll see that price loves to manipulate above or below them before continuing the real move. We can also mark out session highs and session lows, look for deviations there, previous all-time highs, and so much more. That's pretty much it for deviations. This was a little bit more of a chunky video, but you guys should go study this up, really look for a bunch of examples, throw in the deviation fibs for range deviations, see how often they hit and work within the markets, and if you have any questions, drop them in the comments, and I'll see you guys in the next video.